Namaste, my dear friends. This is Mohammad Rafi, faculty and indirect taxes for the past 20 years. Now I am going to work out solutions for May 2025 question paper taxation paper number 3 goods and services tax GST. Let's start now. Referring here question number 5 for 10 marks. MLM Private Limited, a registered person Udaipur, Rajasthan. He made following outward supplies in the month of March 2024. Outward supplies like advance received from Mr. Gokul for the service to be provided in the month of April, 2 lakhs. Provided commissioning services of pure labor contract to Raj Builders for their multi-store residential complex, 5 lakh rupees outward supply they provided. Stock transfer made by the MLM Private Limited to its own branch within the state of Rajasthan, 1,25,000, where there is no separate registrations, only one registration. Outward supply of goods to various unit parties, where the transaction value given along with the market value. We take only transaction value because the supply made to uninsured person, therefore transaction value is relevant. 5,75,000 is the output supply on which if liable to pay GST, we will pay. Provided various warehousing services for kidney beans, rajma, red lentils and other pulses. Warehousing of pulses rupees 50,000. As we are aware of that, this supply is exempted from the payment of the GST, no GST at all. Of course, here stocks transfer made within the state to the branch where the branch has no separate GST number. In that case, it is also be not a supply. There won't be any GST apply. Further, my dear friends, inward supplies received car rental services from Carman Private Limited, an unregistered company in Udaipur engaged car renting services. MLM Private Limited paid rent rupees 1,20,000 monthly basis. Cost of fuel is included in the monthly rent. Is it RCM or FCM? Whether my client here MLM is liable to pay GST or supplier liable to pay GST. Supplier only liable to pay GST because car rental services where the cost of fuel is included, supplier should be other than body corporate. As we understood earlier, supplier should be other than body corporate. In our given question here, if you refer, this car rental service provided by whom? Carman Private Limited. Supplier itself is a body corporate. As a result, is not a RCM. If and if FCM. Therefore, it is not a RCM. Liable to pay GST if and if supplier uninsured person, therefore not liable to pay GST. No one liable to pay GST in the given case. Further, intrastate inward supply of various goods and services for which in the course or furtherance of business. Of course, goods is 7,50,000 inward supply of goods, 2,50,000 inward supply of services. That GST will apply separately for the given supply of goods services. Additional information: the company paid rupees 50,000 to Mr. Ajay, an independent director, as sitting fees. This is comes under RCM, namely MLM Limited Private Limited liable to pay GST. The company made a donation of 4,50,000 to a local old age home, a trust not registered on GST, for setting a water cooler at an old age home with the name of the companies embedded as a water cooler to express their support for the goodness. That means there is no reciprocity here. Even though supply made to particular trust, which is donation not a consideration. Here no reciprocity, therefore no consideration, no one liable to pay GST. Further, all the fees given exclude GST. All inward supply, outward supply, intrastate except otherwise stated. Very good. Subject to information given above, all the conditions necessary for availing ITs has been availed, fulfilled. Very good. CGST, SGST 6% each for goods, IGST 12%. For services, CGST is 9% each, IGST 18%. Calculate the net GST payable in cash by MLM Private Limited for the month of March 2024. Support your calculation with the relevant answers. Very good. In that case, we can answer one by one. If you refer here, my dear sir, in the given case is supply of services. Advance payment is a time of supply. Therefore, intrastate supply they given. All are intrastate. Therefore, 9% CGST, 9% HGST. On 2 lakh rupees, 9% CGST, 9% HGST is equal to how much? One is called as here 18,000 CGST, 18,000 SGST. 2 lakhs into 9%. So 18,000 CGST, 18,000 SGST liable to pay in the given case. Further, provided commissioning services under pure labor contract to Raj builders. Sir, a single residential house for which pure labor is exempted, but it is taxable supply. Therefore, 5 lakhs also services nature. Therefore, attract the GST 9% CGST and 9% SGST on 5 lakh rupees, which is 45,000 CGST, 45,000 SGST liable to pay as an outward supply GST, outward tax liability, output liability. Further, stocks transfer within the state, no GST applicable because it is intra-state, intra-branch transfers within the state where there is no separate registration, not a distinct persons, therefore not a supply. Thereafter, the outward supply intra-state 5,75,000 is supply of dash goods. Therefore, 6% CGST, 6% SGST on 5,75,000, 6% CGST, 6% SGST, 34,500 and 34,500 is a liability. So outward liability we got 18,000 CGST, 18,000 GST, 45 rupees CGST, 45 SGST, followed by 34,500 CGST, 34,500 SGST we got. So the answer here, output liability, is as follows. In the given case, we got output as liability here like this: 18 plus 18, 45,000, 40,000 plus 34,500, which is 97,500 CGST, 97,500 SGST. Got my point, my dear friends? Then come back, referring furthermore, the inverse supply. Here no GST apply. In the given case, no GST because supply is a uninsured person, not a RCM. Then inverse supply goods, that means 7,50,000. In that CGST, HGST, namely 6% each. So 7,50,000 into 6% CGST, 45,000 SGST and 45,000 SGST is the output tax liability. Inward supply is ITC. Inward supply ITC it is. Thereafter, services 2,50,000, 2,50,000 intrastate inward supply, which attract again CGST just 9% each, 9% each. That means 2,50,000 on which 9% CGST, 22,500, 22,500. As a result, we got ITC of this much on services, ITC of this much on inward supply of goods. So total input tax credit, how much now we got here, means here 22,500 plus 45,000. Thereafter, we do have some adjustments. In the given case, they said here adjustment where their company is received from Ajay, independent director, sitting fees, which is RCM apply. Company liable to pay GST on 50,000. What rate of CGST, HGST? 9% CGST, 9% HGST, which is 4,500. 4,500 has to pay by electronic cash ledger, and also this can be available as input tax credit in the same month. That means to say that in the given case, here we have, apart from that, we have 4,500 CGST, 4,000 SGST as our ITC on RCM supply. But when you're going to pay the GST, you have to pay through electronic cash ledger. Is clear, as sir? These points I am presenting here in a simplified manner is as follows. Here as follows. So RCM 4,500, 4,500 CGST, GST on sitting fees. Thereafter, eligible input as credit 45,000 plus 22,500, 4,500 to the 72,000 CGST, 72,000 SGST. We are eligible for input tax credit. Now output tax liability minus input tax credit is equal to the net liability to pay. Here we got, how much we got here? 97,500 CGST, SGST, and ITC 72,000 ITC. Then the net cash payable outward supply 22,500 CGST, 25,500 SGST. Apart from that, under RCM I have to pay the GST, returning cash ledger 4,500, 4,500. As a summary of this report, I am liable to pay returning cash ledger totally CGST rupees 30, SGST rupees 30,000. Total is 60,000 I have to pay through electronic cash ledger. This is what for 10 marks problem, just like that we have solved. Further, my dear friends, question number 5 in that point number B, which is for 5 marks. Reading as follows. Ajay, a registered person, provided the following details about the transaction entered into by him in the month of July 2024. Point number 1. He sold goods to Wellness Pharma rupees 400 each, 300 units, 3000 units at the rate of 400 each. Under section 206C subsection 1 capital H of Income Tax Act, he is required to collect the TCS rupees 2000 from the Wellness Pharma. He included 2000 rupees as TCS in tax invoice issued to the party. That means tax invoice like this, 300,000 into 400, 3000 into 400, which is 12 lakh rupees. Plus he add rupees 2000 TCS, totally 12 lakh 2000. Now they are asking us here, they give the details and this information. Fine. What is the point they are going to ask? Let us find out finally. Point number 2. Under the contract with the state government, he sold goods to economic weaker sections, families identified by the state government. 1000 units, unit price 400 per unit. 200 rupees per unit, balance 200 rupees per unit will be paid by him by the state government subsidy. Government subsidy should not form part. Therefore, 200 rupees per unit is sufficient. So 1000 units into 200 rupees per unit is rupees 2 lakhs is the value of supply in the given case. Subsidy from the government should not be added in the value of supply. Very good. Point number 3. Issue the credit note worth rupees 1,50,000 rupees net of GST as discount to its registered dealers who purchase more than 5,000 units between October and December under the Festival Bonanza scheme declared on 1st October 2023. The above discount provided invoice wise with a condition of reversal of ITC by registered dealer. The above discount provided invoice wise. That means the discount is available in the invoice itself, therefore allowed as deduction. How much it is? It is a deductive nature. Is a deductive nature from the value of supply. Further, sold goods to old age home for rupees 1 lakh. Normal sale value 2 lakhs, but sold for 1 lakh. Samvedana, an NGO registered under section 12A of the Income Tax Act, given subsidy rupees 30,000 rupees to acknowledge this particular elderly people living in old age home. Therefore, 1 lakh plus rupees 30,000, 1,30,000 is the value of taxable supply, because the subsidy is not from government, therefore add up in the value of supply. After analysis of sales report of first quarter, he decided to give discount of 1% to shopkeepers whose total purchase exceeds 25 lakhs during the quarter ending June 2024. Total discount given to such shopkeeper 1,30,000. This 1,30,000 is a post sale discount, therefore not allowed as a deduction unless it is mentioned in the invoice or given before the supply, or there is an agreement should be exist to give such a type of discount. Nothing has been informed to us, therefore we are not allowing as a deduction, not allowed as deduction from the value of supply. Then come to the taxable value of supply for the month of July. So what is the taxable value of supply? That's it, very simple. In the given case, to levy the GST, we should not consider the TCS of Income Tax Act. Therefore, here the value of supply here is only 12 lakhs for taxable supply. Then this 2 lakhs is after the elimination of the subsidy from the government. So the 2 lakh rupees is here taxable supply. Further here is a allowed deduction 1,50,000 allowed as a deduction. Very good. Then they sold the goods for subsidy received from the NGO. Sold goods for 1 lakh. Therefore, 1,30,000 is the value of tax supply. 1,30,000 value of supply. Further, what is mentioned here? Then this discount 1,30,000 we are not permitting, assuming that it is not given before sale or not mentioned in the invoice to be provided in the future period of time. In that context, it is considered as a not allowed deduction. In that case, we have not taken deduction. So how much comes here? Here it is a 12 lakhs plus 2 lakhs minus 1,50,000 plus 1,30,000, which is 13 lakhs 80,000 is our taxable supply to levy the GST in the given case. Further referring to my reference, question number 6 in that point number A for 5 marks. Reading as follows. Purvi Limited, a registered supplier of various goods and services, provided the following information pertaining to the GST paid on inward supplies for the month of August 2024. So, the information given in the month of August by Purvi. Purvi Limited is our client, is a limited company. Very good. Purchase the goods which were used for activities related to his obligation under the corporate social responsibility referred to section 135. Is it qualified as a ITC? GST paid 3 lakh rupees. Here I can say that no ITC because it is a blocked credit. Thereafter, purchase the raw materials worth rupees 5,90,000 rupees including GST in 5 lakhs. 3 lakhs has been received, 3 lakh rupees excluding GST in the month of in the current month, and the remaining will be received in the month of September. The entire rupees 90 ITC allowed in the month of September, but not in the current month. Current month belongs to August month. August month credit not allowed. Total credit is allowed only in the month of September. So presently not allowed. Further, point number 3. Company paid outdoor catering services for the lunch of its factories employee expenses for the lunch. Repeating again, company paid outdoor catering expenses for the lunch of its factory employees during the lunch hours during the lunch hours as per the policy of the company. There is no legal obligation to provide such lunch facility to the employees. So if no legal obligation, no ITC. Purchase goods, because blocked credit is purchase the goods from OEM traders. All goods and invoices were received in the month of August itself, but one invoice out of which invoice has not been furnished by the supplier in the statement of outward supply using the IFF method. The GST paid on such invoice rupees 50,000 out of 2 lakhs 50,000 in ITC, not reflecting the GST to be to the extent not allowed. Therefore, allowed how much? 1,50,000 only ITC allowed here. Further, purchase raw material to manufacture the finished goods. Such finished goods to be sold to potential customers under the scheme buy one get one free. Buy one get one free is nothing but a composite supply. If it is a composite supply, principal supply will attach GST. If mixed supply, highest rate of GST will attach GST. In that case, the entire 1,50,000 ITC allowed only, no blocked credit here, because not given gift is a buy one get one, not a gift. Therefore, taxability is there, either composite supply or mixed supply. Then they asked us to find out the ITC eligible to Purvi Limited for the month of August. Very simple. Here, how much is qualified ITC? Nothing is there. This enter value, no ITC. CSR, not allowed. It is also no ITC. Here, no ITC. Here, 1,50,000. So, 1,50,000 ITC. Thereafter, 1,50,000. Here, ITC. This one, these two. Totally 3 lakhs. So, ITC allowed in the given case is only 3 lakhs. Further, my dear friends, question number 6 in that point number B for 5 marks it is. Reading as follows. Examine the following independent cases and determine whether the services are taxable under GST. Dhruv Printing Press, a registered entity under the GST, received an order of rupees 1,50,000 from Visakhapatnam Technical Institute, not Visakhapatnam, Vishwakarma. Repeating again, Dhruv Printing Press, a registered entity under the GST, received order rupees 1,50,000 from Vishwakarma Technical Institute, a private ITI providing courses notified under the Apprenticeship Act 1961 for printing of pre-examination items like question papers, OMR sheet, answer booklet and so on. Sir, private ITI is qualify as education institution? Yes. If the private ITI courses approved by NCVT, National Council for Vocational Training, or SCVT, State Council for Vocational Training. In the given case, the private ITI is offering designated courses which is approved under the Apprenticeship Act. Then for which NCVT or SCVT will provide the recognition, obviously. Therefore, we assume that private ITI is qualified education institution providing services, and to them conducting of an examination, provide any services, qualify from exemption. From that aspect, it is qualified from exemption. It is exempted because independent cases. Each one is one of the independent cases. I determine the tax liability, taxable or exempted. Point number here 1 is exempt. Point number 2, State Board Education, a registered entity, charge rupees 15 rupees per year affiliation charges from a school run by Dharmpal Trust, registered under section 12A of the income tax. So what? In the given case, my dear friends, the affiliation fee is collected by the State Board of Education from the schools run by the government or local authority, only qualify exemption. Here the school run by the Dharmpal Trust, which is not a government, not local authority. Therefore, this is taxable supply, affiliation fees. Further, point number 3, V-Care Hospital registered entity charge rupees 19,500 for 3 days from Mr. Sahil, who was admitted in intensive cardiac care unit ICCU due to heart attack. Now, in the given case, my dear, ICU, ICCU and all, irrespective of the value, qualify from exemption per day per room. In the given case, the entire rupees 19,500 is exempt under the healthcare services. Point number 4, Sit Care Hospital, a registered entity, entered into an agreement with a Swedish carrier, a registered entity, to supply the food in patients as per the advice of doctor or nutritionist. The Swedish care sends the monthly bill to hospital for the food supplied by them to the admitted patients of hospital. Determine the tax liability of Sit Care Hospital. Tax liability means what? Sit Care providing the food to patient, which is exempt, whereas Swedish caterer providing services to Sit Care Hospital, that case it is taxable. For the given question, determine the tax liability of Sit Care Hospital, yes, exempted. Service offered by Swedish caterers to Sit Care Hospital is taxable supply. Further, question number 7, in that point number A, Mr. Rajan availed ITC of rupees 1 lakh in GST 3B for the month of June 2024. The output tax liability for the month of June 2024 was nil. His intrastate outward supplies for the month of July 2024 is 5 lakhs excluding GST. He utilizes the availed ITC against the output tax liability for the month of July. While filing the GST 3B, Mr. Rajan found on 22nd September 2024 that wrongly availed ITC of rupees 1 lakh in the month of June 2024. He reversed and unutilized the amount of wrongly availed ITC standing in the credit ledger on 30th September 2024 and paid the unutilized amount of ITC by cash. The GST rate 18%. Calculate the interest payable under the applicable GST law if Rajan filed from Form GSTR 3B for the month of June 2024 on 19 July 2024. Form GSTR 3B for the month of July was filed on 25th August 2024. Note, due date of the GSTR 3B is 20th day of the following month, but the due date of filing the GSTR 3B was extended on 22nd August 2024 for the month of July 2024. Excellent problem it is. Very simple problem. This problem referring section rule number 88, sub rule number 3, where interest at the rate of 24% per annum because the amount of credit utilized wrongly from the date of utilization till the date of payment to department will attract the interest at the rate of 24% per annum. In the given case, very simple, they said, what is the credit here? What is the liability? First of all, for the month of July was 5 lakhs, on which GST payable 18%. So on 5 lakhs, 18% GST is equal to 90,000 rupees. Now they have the credit in the month of June itself, 1 lakh rupee, avail the ITC in the month of June, but utilize that amount wrongly, availed ITC, standing the credit on ledger on 30th September 2024. He reversed the credit, that unused amount. Okay, very good. So now what happened here in the given case is rupees 1 lakh of ITC utilized for payment of rupees 90,000. The balance excess credit of rupees 10,000 carry forward. That means out of 1 lakh of wrongly availed credit, wrongly also utilized 90,000 rupees. So when it is utilized for the month of July, liability when they are going to pay, when they paid month of July liability, the liability they paid when means by filing the GSTR 3B return. When they filed the GSTR 3B return for the month of July, they filed 25th of August. So 25th of August or due date of filing the return GSTR 3B, whichever is earlier, is the date of utilization. In the given case, 20th day of the following month, namely 20th of August is the due date, but they have been extend the due date to 22nd August. Therefore, 22nd August 2024 or date of filing the GST 3B, namely 25th August 2024, which is earlier. So the earlier here is 22nd August 2024 is the date of wrongly utilized ITC. So in the month of August, 31 days minus 22 days in the month of August. So 31 minus 22 is equal to 9 days. Delay happened to reverse the ITC because from the date of utilization to make the payment of that particular wrongly availed ITC. So 9 days in the month of August, and when they paid this amount back to department, when they reversed that or paid the amount, he reversed the unutilized amount of wrongly availed ITC standing in the credit ledger on 30 September and paid the utilized amount of by cash. So this wrongly availed ITC of rupees 10,000 is left over as a credit, is reversed. So for the 10,000 reversal, then credit ledger will become 0. No interest will attract. But wrongly utilized the amount when utilized 22nd August, because due date of filing the annual the GST 3B return or actual filing 3B return, whichever is earlier. In the given case, 22nd August is the action due date. So that will be final. So that date to be file the return but not filed. Due date of filing the return in the given case is 22nd of August or actual date of filing the return GST 3B 25th of August, which is earlier 22nd of August. So that is the date of utilization of ITC of rupees 90,000 wrongly utilized, for which you have to pay the interest at the rate of 18%, 24% per annum. In that case, in the month of August, you file the return when 25th of August. Very good. So actual date of utilization is 22nd of August. So from 23rd of August to 31st of August, 9 days plus September month when you repaid the amount on 30th. Therefore 30 days. So totally 39 days. So the interest on rupees 90,000 at the rate of 24% per annum for 39 divided by 365 days. that is the amount of interest will become into picture. How much comes here? 90,000 into 24% per annum into 39 divided by 365 days, which is comes 2,308 rupees. Round off is the amount of interest you liable to pay to department along with the payment of rupees 90,000. This is what they're here. If you refer, this point will be crystal clear in the given solution. Refer the solution here will come across by you. Directly I am presenting the answer for the given case. Here is as follows. The solution is as follows. This particular answer sheet I am going to provide the link to download in the description below. The entire answers I am providing in the description below, along with the question paper also. Yes. If you refer here, charging of interest. Yes. So 2,308 rupees is the round figure interest liable to pay. This interest how you got? I explained to you just now with the detailed manner in the given case. Further, my dear friends, question number 7 in that point number B for 5 marks. Briefly discuss the provisions relating to inspection and verification of the goods in transit, laid rule number 138C of the series rules. This is already aware of that, we referred in the class. During transit, department officer detained the vehicle where they found not available of a valuable document of e-way bill and all. Then in that case, from the date of interception within 24 hours, EWB 03 part A should be fill up summary report within 3 days from the date of interception and upload the entire information in part B of the EWB 03. And the 3 days not sufficient, the commission will extend for the 3 days time period, which is we discussed in the regular class, rule number 138, the e-way bill concept. That time we discussed these points. Get my point, sir? That needs to be uploaded in the particular EWB 03. This is rule number 138C refers. And not only that, my dear friends, and the 24 hours from the time of interception, upload the summary, thereafter detailed report within 3 days. That count record from which time period means the day of interception. In that midnight onwards, this particular 24 hours or the 3 days count will start. This is what I already referred this point to you for your kind consideration. 24 hours, within 24 hours, you have to be fill part A of the EWB 03 as an officer, and the department officer should be fill up EWB 03 part B within 3 days of interception. If 3 days not sufficient, furthermore 3 days can be extended by the commissioner. The time limit commences 24 hours or 3 days. Time commences from midnight of the date on which the vehicle was intercepted. This point we already referred in the regular class, and also be here is appeared as a question. What we can just like that you can answer. Further, question number 8, where as per section 7 of the CGST Act, for the purpose of the goods and services tax GST, the expression supply includes all form of supply of goods, services, or both are given. Section 7(1) class A. Discuss as per the provision of the GST law rules made thereunder when the activity can be treated as supply even if there is no consideration. Yes, in that case, refer Schedule 1 transaction. Schedule 1 transaction. Even transactions without consideration is a supply. There are 4. What are they? 1. Permanent transfer of business assets on which input tax credit has been availed. 2. Transfer, supply of goods, supply of both between distinct persons and related persons in the course of furtherance of business, provided the gift given by employer to the employee not exceeding rupees 90,000, not exceeding rupees 50,000. Sorry to say. Repeating again, point number 2 of Schedule 1. Supply of goods, supply of services are both between related persons or distinct persons, not a supply, even though it made in the course of furtherance of business. Without consideration, not a supply. Or is a supply? Is a supply. Even without consideration is a supply. I mean to say that this is a lollipop one which already we discussed elaborately. Out of 4 transactions covered under Schedule 1, even no consideration is a supply. First point, permanent transfer of business assets on which input tax credit has been availed is a supply. 2. Supply of goods, supply of services are both between related persons, between distinct persons in the course or furtherance of business even without consideration supply. Their proviso provided that if the employer given the gift to the employee not exceeding rupees 50,000 in a financial year, then it is neither goods nor services. Point number 3 of Schedule 1. Principal supply the goods to the agent where the agent undertaken to supply the goods on behalf of the principal, or principal supply the goods to agent where the agent undertaken to receive the goods on behalf of the principal is a supply even without consideration. Point number 4 of Schedule 1. Import of services by a person from related person or from an establishment outside India in the course or furtherance of business is a supply even without consideration. These 4 points we already discussed. The fellow is asking what are those points. Further they are asking, or otherwise even if it is not in the course or furtherance of business, when a supply is called as supply, meaning import of services for consideration, whether or not in the course or furtherance of business covering under section 7 subsection 1 clause B. If you mention that is sufficient, where even without in the course of even without even not in the course or furtherance of business is a supply if import of services for consideration. If no consideration, refer 7 Schedule 1, namely section 7 subsection 1 clause C. Read with Schedule 1 4 points. You have to answer this. The answer is given in the description below. Further, my dear friends, under the question number 8, point number B, explain the provisions relating to the validity period of the registration certificate issued by the casual taxable person and non-resident person. We are aware of that. We refer in the regular class. It is for a period of 90 days from the date of registration or the period for which the registration has been sought for registration, amount whichever is earlier. It is applicable even for casual taxable person as well as NRTP, non-resident taxable person. Time period is period for which you sought for registration, or 90 days from the date of registration, whichever is earlier is the period for which your registration is valid. Furthermore, extension for the period for which you sought for registration or for the 90 days from the further extension, whichever is earlier. For a maximum period of 180 days only, the registration is valid as a casual taxable person as well as non-resident taxable person. Is the answer for the given case for 2 marks in fact. Point number subpoint 2 of point number B of question number 8. List the deficiencies of the erstwhile value added tax which leads to evaluation of the GST. Demerits of the prior to GST law, cascading effect of tax, no uniform tax. You get my point, sir? That type of points you can mention. There's no free flow of input tax credit, multiple taxes was there. This and all has been addressed in GST law as a cure for ill of indirect taxes. That point you can mention here. Further, question number 8, in that point number B, a particular answer. If not the above this B, if not this B, you can answer either one for 5 marks. Section 31 requires that a tax invoice shall be issued before or at the time of delivery or removal of the goods. Specify the situation where the tax invoice can be issued after delivery of the goods. Discuss the provisions relating to the issue of a tax invoice or delivery challan in case of transportation of goods in or semi-knocked down or completely knocked down condition or in its branches, batches or lots. Very simple. Section 31 refers what? A invoice should be issued for supply of the goods as per section 31(1) clause A or clause B. Supply invoice movement of the goods on or before the movement of the goods, invoice should be issued. If there is no movement of the goods on or before supply, invoice should be issued. But here they are asking, in the given case they are asking, what are the cases for which invoice can be issued even after the supply of the goods? 1. Goods sent on sale or approval basis. At the time of supply, no need of invoice. After supply, buyer accept, that time only you issue the invoice. Second case, goods has been sent by principal to job worker. That is not a supply as per section 143. In that case, subsequently from job worker place, principal selling the goods, that time only liable to issue the invoice. Thereafter, goods are sent for exhibition where it is not considered as a supply, because once the exhibition is over, the goods coming back to supplier place, therefore not a supply. If during the exhibition, if the goods sale taken place, then the invoice should be issued. In that case, invoice can be issued after supply of the goods. Get my point, sir? So is the cases, these points if you mention in the given case of a question number 8b is a solution. The detailed solution has been given in a simplified manner in the description below. I have given question as well as answers, question paper as well as answer for May 2025 in the description. Just to click the link, you will be able to get question paper and you will be able to get answer sheets. Got the clarity, my dear friends? With this, the entire 50 marks of the GST part May 2025 examination question paper of GST paper number 3 section B taxation is completed. Thank you, my dear friends. Thank you to one and all.